we have a geo situation that we have to keep at least one eye on. And I went to your stream, Bob, and you actually, try to explain to people what it's like to have a war economy and, what it means for markets. Can you share that with our viewers today?
Yeah, I mean, I think none of us basically have any idea what it's like to live through a major global conflict, right? I mean, we
Yeah.
haven't seen if anything, actually, I showed some charts on there, which I thought were interesting. I hadn't seen before I started looking into it, which is that like global conflict is at like orders of magnitude lower than the sort of norms of the last 600 years. And so, that's basically how our careers and frankly my whole life has been in that sort of state.
Yeah.
And the issue with conflicts is that basically, if you just think about it from a fundamentals perspective, what you're doing is you're digging stuff out of the ground and you're creating production and then destroying it, right? That's the basic thing. And then you're financing it with large deficits, usually through yield suppression in order to keep the financing costs down. And you put that all together, and what does that mean? That means that it's a bad, inflation is elevated, even though growth is elevated, inflation is elevated. It's both of those things are bad for bonds on a real basis. Typically bad for stocks because the economic rents basically go to the government rather than to the producer of the products for a variety of reasons that are probably intuitive.
The war machine,
the war machine, right? It's just that's the way it works. We socialize the productive capacity in one form or another. And then the other elements are, commodities do very well because you're digging them out of the ground and destroying it. And gold does well in that environment as well, because it's essentially the only money that's not being debased by governments in order to pursue the war effort. And so you put that combination together, that's essentially the best portfolio is gold and commodities. And then you think about how people are basically positioned strategically, which is bonds and stocks. And they're basically totally underweight.
Wrong side of the fence.
Yeah. Right. Totally underweight rising conflict.
Yeah. And I know that you're a believer in gold as part of the mix of a portfolio. So, I mean, I know you're a gold watcher. Was that one of the most dramatic rallies you've seen in gold in a long time? What did it do? Put $150 on?
Well, I think the thing that's really interesting, so gold, you got to think about, it's basically two things. It's a geopolitical hedge, which we all sort of know, but it's also non-yield bearing money. And so when you think about gold, in general, actually, you want to think about it relative to bonds, because, bonds pay a yield and gold doesn't pay a yield. And so even when I trade it or think about it, I'm trading a diff position rather than an outright position. I think the thing that's pretty amazing is how well gold has done relative to bonds. Which in the last few weeks, I mean, structurally over the last 3 years, it's done fantastically well relative to bonds. But even in the last few weeks, I think that speaks to the bid it's getting from the geopolitical tensions. And these are the sorts of things, gold has high convexity to these sorts of events. And so it's why in a portfolio, you actually don't need that much gold to protect yourself, but it doesn't take a lot of incremental buying to start to create meaningfully sized price action in gold. And so I think that's kind of what we're seeing is in the grand scheme, the situation in Israel is terrible, and is contributing to increasing global tensions in the grand scheme of global conflicts. It is certainly not yet nearly as substantial as those previous global conflicts, but we're still getting a significant bid in gold because it has that convexity. So I think that's what you have to. That's why gold is a great asset to hold as a small position in a diversified portfolio.